When you set out to trade a trend, you must begin with one realization. The market does not reward impatience, hope, or eagerness. It rewards clarity, observation, and discipline. A trend line is one of the simplest tools ever placed on a chart, yet most traders fail with it because they approach it with emotion instead of logic. They draw what they want to see, rather than what the market is telling them. They force patterns into existence, believing a trend is present simply because they want a profitable opportunity. But a trend line is not a wish, it is a truth that must be earned by price, and once it is earned, it becomes one of the most powerful guides a trader can rely on. A high win rate trend line strategy begins long before you draw a single line. It starts with recognizing that the market is a living mechanism, shifting, breathing, expanding, contracting, and your job is not to control it but to read it. You must watch how price behaves, not how you want it to behave. You must study the rhythm of its swings, the strength of its moves, and the character of its retracements. Only after you understand the personality of the market you're dealing with can you trust a trend line to serve you instead of betray you. Every strong trend has three qualities: momentum, consistency, and behavior. Momentum shows itself through clean directional pushes, candles that leave little indecision behind. Consistency is seen in the spacing of the swings pullbacks that respect a certain depth without becoming erratic. Behavior reveals itself through how traders respond to those pullbacks, whether the retracement is bought or sold with conviction, whether the crowd hesitates or acts decisively. If these qualities do not exist, you do not have a trend. You have noise, and noise has no loyalty to anyone. When you identify a legitimate trend, your next task is to let price anchor your trend line. A trend line is more than a diagonal stroke across a screen. It is the collective reaction of thousands of traders responding to a market phase. Each touch point is not merely a point on a chart, it is evidence of a repeated psychological memory. Buyers are stepping in at familiar locations, or sellers are pressing at consistent levels. The market remembers these places. Your job is to respect that memory. The mistake many traders make is drawing their trend line on impulse. They place it after one swing, then another, believing they've captured the trend. But a single touch means nothing. 2 touches begin to form a theory, and 3 touches confirm participation. Without 3 touches, you have nothing but hope disguised as analysis. A high win rate begins with confirmation. Guessing is gambling. Waiting is strategy. Once your trend line is validated by price, then you shift your focus from drawing to interpreting. You now study how price interacts with the line. Does it tap it lightly, or does it slam into it? Does it bounce with strength, or does it rise sluggishly as if exhausted? Does the market respect the trend line with precision, or does it violate it by small margins yet recover immediately? These are the details that separate a disciplined trader from a dreamer. The simple truth is that not all touches are equal. A clean, sharp pullback into the trend line after a strong impulse leg shows confidence among traders. A weak, choppy crawl back toward the line tells you indecision is building. A violent rejection off the line signals commitment. A mild, slow reaction signals hesitation. You must read the personality of each interaction. A high win rate strategy begins with entries based on behavior, not blind reactions. When price approaches your trend line, you don't simply enter because it touched. That is the behavior of someone who thinks the line is magical. The line itself is not sacred. The reaction to the line is what matters. What you wait for is evidence that other traders agree with your interpretation of the trend. Their reaction confirms your opportunity. The most consistent entry occurs when price pulls back to the trend line in a controlled manner, small candles, diminishing volume, and a lack of aggressive counterpressure. This shows the counter-trend move is weak. The stronger side is merely waiting to resume control. When the retracement weakens, the trend often strengthens. Another reliable entry is when price retests the trend line after a false break. Many traders panic when a trend line breaks temporarily, but professionals do not. They wait for a close back above or below the line and then gauge the follow-through. A false break traps impatient traders. It fuels the continuation of the trend. If you have the patience to wait for that retest, your win rate increases dramatically because you're trading not only price action but also the psychology of trapped participants. But entries alone don't create consistency. The heart of a high win rate strategy lies in knowing when not to trade. If the trend weakens, if the swings become irregular, if the reactions lose strength, if the retracements deepen beyond pattern, you step aside. Missing a trade is not a loss. Forcing a trade is. If you want to survive and thrive, you must treat every decline in trend quality as a red flag, not an inconvenience. The market is warning you that the rhythm has changed, and any attempt to trade that environment is an invitation to damage your account. A trader with a high win rate knows that waiting is part of winning. A trader who cannot wait will sabotage any strategy, no matter how powerful it is. Now consider the exit. Many traders have decent entries but disastrous exits. They cut winners too soon or hold losers too long. A trendline strategy requires the precise opposite. You let the trend work for you, and you cut the moment the trend signals fatigue. A trendline break does not immediately mean the trend is over. What matters is behavior after the break. If price breaks but fails to accelerate, you may be witnessing only a temporary violation. But if price breaks and then retests the trend line from the opposite direction with conviction, the trend is likely finished. The principle is simple. The trend pays you. When the trend changes, your loyalty must shift. The goal is not to be right. The goal is to profit. A trader who seeks to be right will cling to a dying trend. A trader who seeks to profit will exit without hesitation. Risk management intertwines with trendline trading the same way discipline intertwines with survival. You never risk heavily on a single touch, a single reaction, or a single candle. You risk based on the reliability of the trend, the clarity of the structure, and the position of your stop relative to the trend line. Your stop must always sit beyond the line, beyond noise, beyond randomness. If your stop is placed where price frequently wicks, then your stop is not a risk measure, it is a donation. One of the most powerful truths I learned through years of battle with the market is that a single trend can make your entire month, and sometimes your entire year, but only if you have the courage to stay with it and the discipline to avoid jumping off prematurely. A high win rate strategy doesn't rely on frequent trades. It relies on quality setups and disciplined execution. Many traders chase multiple mediocre opportunities. Professionals wait for the rare but clean trend structures that offer consistency. A trend line is a guide, not a guarantee. It is a map of collective psychology during a directional move. The market will not always give you the perfect bounce, the perfect retest, the perfect reaction. But when it does, and when the structure aligns with behavior, and behavior aligns with momentum, the probability is heavily in your favor. Do not try to force perfection. Instead, aim to execute with clarity. Your responsibility is not to predict, it is to react with discipline. That's the difference between a trader who endures and one who disappears. Every high win rate trader I've met had one thing in common. They removed ego from the process. They didn't argue with the trend. They didn't redraw the trend line to justify their hope. They didn't widen their stop to protect their pride. They followed the line until the market told them it was finished. And when it was finished, they left without negotiation. If you want to reach that level, you must approach every trade with humility. You must be willing to say, if the market disagrees with me, I leave. If the trend continues, I ride it. That mindset alone increases your win rate more than any strategy ever could. A trendline strategy works because it reflects order in a world of chaos. It gives structure to the unpredictable. It is not perfect, but when used with discipline, patience, behavioral interpretation, and risk management, it becomes one of the most reliable methods available. To trade it well, you must become a student of human behavior. You must observe how fear and greed show themselves in every candle. You must watch how crowds react to pullbacks, how they panic during breaks, how they chase after impulses. A trend line is simply the visual representation of crowd memory. When you respect that memory, you gain clarity. When you ignore it, you invite disaster. The high win rate does not come from the line itself. It comes from your relationship to it. It comes from your ability to wait for clean conditions. It comes from your ability to stay patient until the market truly invites you in. It comes from your willingness to accept small losses quickly and ride strong moves fully. It comes from understanding that your job is not to control the trend, but to follow it. If you want to improve your results, start by improving your discipline. If you want more consistency, start by eliminating low-quality setups. If you want a high win rate, stop trying to force the market to obey your expectations. Let it lead. Let it speak. Let it show you where the meaningful points are. Then draw your line. Then wait. Everything in this business rewards patience and punishes impulse. A trend line is a mirror that reflects that truth clearly. If you align with the trend, it will carry you. If you fight it, it will crush you. Master one clean strategy with unwavering discipline, and you can build a career in the markets. The trend line, simple as it looks, has served countless traders for generations. It will serve you too, if you give it the respect it deserves. And before you continue watching more content, take a moment to subscribe. Every piece of knowledge I share is for traders who want to approach the market with seriousness, discipline, and clarity. If that is your goal, this channel will continue to guide you toward a smarter, more structured way of trading. Stay patient, stay observant, stay disciplined. The market rewards those who wait for the right moment and punishes those who act on impulse. A trend line tells the truth. Learn to read it, and your trading will never be the same.